Today, I'm bringing you another epic interview with our guy, SMCCL, in a Discord. And to date, he's locked in $230,000 in futures props payouts. You don't want to miss this. Now, I want to tell you, he is stealth like me, okay? Because he's doing some deep operations behind enemies' lines. So he's not going to show his face just like me. But we will be showing you the juicy details of how he locked in this $230K in payouts in his first year trading. So, SMC, how you doing, man?
Good, brother. Thanks for chatting with me.
Good to see you, and thanks for coming on. Now, before we start, we always do this. Do you mind sharing your screen and showing people the payouts that you've locked in so far?
Sure, let's do this.
So we got your Rise accounts here. If you can hit like an F5 or something, refresh it so people can see, and then do a little scroll to the bottom.
I trade everything out of a VPS, so there's a little delay there.
Okay.
I'm on a Mac, and then I have a Windows VPS in Chicago that I connect and trade out of.
There you go. So it's loading. All right, so if you don't mind scrolling down and just letting see some of those payments. Look at that, guys. Thousands and thousands and thousands of dollars of futures prop payouts. And this is only in August.
Yeah, but so far what you see here is just August.
The reason why I'm so intrigued with SMC here is because he showed a chart, like a bar graph inside of Discord. He showed us the expense versus payouts that he's recently received. And that ratio is so crazy, so ludicrous that I had to talk about it on a live stream today. There it is. That's that chart right there that he just loaded up. In the month of August, if you can see here, his expense was $1,900, almost $2,000, and his payouts was $64,000. Is that right?
That's right.
I don't know how you did this. I've never had any given month where I spent $2,000 and locked in 64 grand. So there we go. We have another rising star, right? 64,000 divided by 177. That's 32 times the money that he put into prop firms and him taking out of prop firms. And so without further ado, with the proof, with the payout shown here, let us get to how you started this, because SMC, you told me you started trading futures prop firm only this year, right? But have you always traded? Like, give us a little background of your trading story and how you got into futures.
Yeah. So I started getting interested in investing probably in 2010 or so. I got interested, but I didn't really have any money. I was just starting my career, just starting with my family. And I did like most people do, which is start with cheap stocks, which of course meant penny stocks. And naturally, for like a year of dabbling with that, I lost money. I made nothing. Nobody probably makes anything in that space. Yeah. I certainly didn't. I learned about futures early then, but I didn't trade. And I started doing research, and I actually started a blog way back then about some of my research because I'm a software guy. So I started writing software and doing research, coming up with models and ideas. And a hedge fund actually hit me up one day on my blog and asked if I would be interested in writing some software for them. They're a hedge fund out of Texas, and it was two guys and one primary trader. And they basically came to me and said, we would like you to analyze our trades and see if you could come up with algorithms for us to scale our capital, because they were starting to hit some limits on what they felt like they could do based on their strategies. And of course, I was like, that sounds amazing. Absolutely. I'd love to do that. So I spent 6 months with a fellow colleague of mine that I convinced them to bring on, who actually was an AI ML guy back then. He was a PhD out of a big school that I worked with in industry. And we sat for 6 months and analyzed all their trades, wrote a bunch of software to try to find an edge. We purchased all the CME data, all the tick data, billions and billions of transactions, and tried to analyze it and find edge. And another thing they did with us daily was their morning briefs. So every morning I would get on a phone call and I would sit there silently because I knew I was the dumbest person in the room in terms of knowing anything about markets. And I would just sit and listen to them talk. And these are professional traders managing millions of dollars. And I would just take it in. I would listen to them interpret the macro, the news of the day, what their current positions were, what their sort of bias was on the day. And we did this for months and months and months. And then as we got to about the 6 month mark, my coworker and I, we had something which was very marginal, in my opinion, as a totally automated system that we had come up with. And it was a support buying system, intraday support buying system. And we wrote this whole white paper for him with all of the metrics going all the way back to the beginning of the CME futures data of, worst drawdown scenarios, all this type of stuff, all the optimizations we used. And we gave it to him, and weeks later, and he was like, man, I'm burnt out. I don't like this hedge fund industry. Sorry, I brought you along only to have to do this. But basically, I was fired right then because he closed down the fund. His primary investor was a single person, really. And he was just like, I hate the guy. I don't need his money. I don't want his money. I'm going back to just trading my own capital. And that was the end of that. And it was truly heartbreaking. And I felt like, okay, what do I do now? So this was probably 2015 or so. And I had learned so much from him. I just absorbing over that 6-month period every day, and so much from just writing software that I realized, one, algorithmic trading, if you're just trying to use simple signals and things like that, is, gosh, man, it's so hard, maybe even impossible. I'm sure people are doing it, but I will just say, unless you're HFT and your commissions are nil, and you've got special flags on your orders that give you preferential treatment in the queue and stuff, dude, is just impossible, is kind of what I came up with after all that work. So I went to just saying to myself, why don't I just trade like he did? Every morning I would hear him, why don't I just try that? So I started doing that in a personal account, and I grew that personal account using his sort of, strategy of coming up with a bias and support and resistance. It was very classic, support and resistance, buy support, sell resistance. That's all it was. And I grew that account until eventually in 2019, I liquidated it to buy a house. I bought a vehicle. I started to, kind of do things for my family. And then I went to trading my IRA for futures. And my IRA at the time was probably only about 49, 50,000, somewhere around there. And then over the next couple of years, I traded that up to around $350,000.
What?
Just in futures. Just doing what he did and sort of my own take on it. And then this year, I was like, I really missed the income stream that I had when I was trading my taxable account. I'm going to start doing that again. And I decided to open an account this year. And right as I was doing that, I learned that prop firms exist. I didn't even know retail prop firms existed. And I was like, oh, let me give that a shot. That sounds like a pretty low risk way to scale out my effort, because rather than me trying to figure out how to get a 20 lot and feeling the stress and the heat of that, I could just do a 1 lot across 20 accounts, because I was mostly only a 2 to 4 lot trader, even in my IRA. I never really went that big. I just trade a lot. So I trade frequently. So I ended up starting prop this year, and you can see in my chart.
Sorry, SMC, before we keep going on your journey to prop firms, I don't want to brush over something you just said that was mind-blowing to me. You told me you had an IRA account at about, $39K, and you took it up to what?
About 49 or 50, somewhere around there.
Okay, 49, 50K, and you took it up to how much?
Right around 350,000 after about from 2019 to probably 2024.
Okay, so you made another 300K trading futures. So you didn't just have 230. So the real title from the beginning should have been futures trader receiving $500,000. I just don't want to brush over that. Okay, even if it's over 5 years.
If you want to count what I liquidated to buy the house, there was in my taxable account before that. I don't know the exact number then, but probably maybe 120,000 or something. I'm not totally sure.
120 on top of 350?
Maybe, because I liquidated the taxable account to put a down payment on the house, and that was around $110,000. And then I bought the car for my wife, and that was probably around $25,000.
Wow, that is amazing. Okay, so we're gonna keep going with your prop firm story, but I don't want to just brush right through that. And by the way, I have no idea you had. I just started talking with SMC right now. I'm learning this story just like you guys are listening right now. We run across different people in a community. That's why I said the power of this community is so great. I learned from you guys. As you know, I'm an average Joe trader, so when I get to hear stories like this, I get excited. And so what I picked up so far, okay, is that SMC here had started with some kind of hedge fund, learned about high frequency trading, learned about support and resistance, building a bias. And even though he had some kind of a down move, he got fired from the hedge fund, he took the knowledge and took an IRA account from 49K to 350 plus the 100K he did for the house. So guys, if you didn't get anything so far from this interview, It's the resilience. It's getting back up. If you're feeling right now that you're down, you're hurt, you're red, I mean, listen to the story. We still haven't gone to the juicy part yet, but this is so juicy here just by getting fired from the hedge fund into making that $350K and more. Man, I mean, I can't wait. So sorry I interrupt you there. Tell us more, like from your transition from the IRA account and then you learn about the retail futures. Like tell me from that story onwards, man.
So the IRA account, I trade differently than prop. I had developed a sort of systems of hedging aggressively in my IRA account where options on futures, FSP, are just, I'll tell you what, that is my favorite product. Okay. And I would do a ton of things like covered calls using even zero DTEs on the outright futures. I would sell put spreads on big days where I felt like the downside was in check. I'd come in and I'd sell a whole bunch of put spreads on futures, you know, just basically betting that it won't go down. I would sell outright puts sometimes when I was perfectly fine getting exercise. So a lot of income in the IRA came from options on futures, a ton of it, maybe even at least half.
I got to tell you, I've never heard of someone trade futures options the way you explained it so far. And so I'm learning a few things here. For those of us who are trading more heavily on futures prop firms right now, can you now direct your attention on how did you kind of adapt your strategy from going with futures options into futures prop firms? Are the strategies different? Like how do you do it in terms of the day-to-day to achieve these kind of crazy 32x return, spending $2,000 in August and making 64 grand in payouts?
Yeah, so that, as you can see in April, there was a learning process there where expenses exceeded, you know, revenues. There was a learning period there for sure. And what that was is I first started with Apex because I was like, okay, 20 accounts, that's pretty incredible. And then I learned about copy trading and I was like, oh my goodness, what a way to just absolutely scale this thing to ridiculous numbers, right?
Yeah.
Well, you can see in the month of April, that did not happen, you know.
There you go.
So, you know, copy trading was a disaster. I lost so many rounds of 20 accounts and so much just because I was copy trading and I wasn't used to the drawdown. In my IRA, as you get to the kind of figures we're talking about, $2,000 loss, especially unrealized, is like, I'm not going to liquidate the position because of that. No, like I like the trade. I'm not about to get out because of a $2,000 loss. Prop, everything's different. So in that scenario, I was kind of searching online, and I don't even remember how I found you, brother, but I did. And you talked about, like, it was one of the first things I heard you say. It was like music playing from the clouds. It was just this don't copy trade. And it was like, oh, you got to fight the greed. You got to fight the greed. The scaling comes from lots of accounts and trading them small. That's the trick. You have to be patient and you have to trade small. You trade bigger than I do, FSP. You get pretty aggressive on some of your accounts intraday. I don't ever get as aggressive as you do. But I know you also do a lot of evals too.
Yeah.
So I tend to do my evals in what I kind of call campaigns, where it's like I say to myself, okay, for the next 2 weeks, I'm going to spend whatever, $5,000, $10,000, and I'm going to get 30 or 40 funded accounts in a backlog. And then the next month, which is what August was. August was kind of harvest of the seed planted in July, the $10,000 you saw there, you know.
Nice.
So now I'm about to go into another sort of planting episode, a campaign where I'm probably going to spend $5,000 or somewhere around there and maybe a bit more. And my P&L, my revenue to expense ratio won't be as good next month probably. But then if things stay constant, the back half or the last quarter of the year should be pretty good. So I do it kind of in waves like that. So most of my trades during the day, other than those campaigns, are all unfunded accounts entirely, even first entry. Always. I'm just on funded accounts.
Yeah, I mean, when you have enough funded accounts, there's no need to trade evals. That's why I have certain days where I trade evals, I load them up. And if you have to ramp up, let's say in a month, let's say you drop 10, 20K, but you load up a whole bunch of funded accounts, you know you're going to get it back if you can just trade it, like rotate them, get net green. So totally no problem there. So your strategy is good. Let's get into a little bit of details, because when you say you trade small, do you mind like loading up on a chart? I think you traded today, right? Can you run us through like a couple of trades when you say you trade small? Like what's your strategy? How does it look like? What's your size? What's your entry? That kind of stuff. Can you run us through a few trades?
Yeah, I've got some screenshots here where they're annotated.
Oh, perfect.
And my strategy is so simple.
Simple most of the time is the best, you know.
And when I say simple, here's my entire strategy. I only buy support. I don't even short. I just don't short. I never short.
So you're perma bull then?
FSP, I got to tell you, brother, I've watched you a lot. When you get into trouble, it's on that short side, man. It's on the short
I know,
side.
man. Getting squeezed, man. Getting squeezed so many times, man. It's no joke.
If I'm bearish, I'd rather just be flat.
Okay, interesting.
So here's an example. Today, you could see we were kind of coming up against this. This line wasn't drawn there until after we broke through. We kind of punched through. This purple line is just the prior day's close, so you can ignore that. But then we punched through, and you see we spent a ton of time up here, and then we come back, and boom, we test into it, which is, to me, that's a nice support area. I bought, and I sold. I didn't wait for new highs. I didn't wait for this new high. I had a nice 10, 20-point run, and I banked it in that account, and I rotated the account. Next account.
Nice. Wait, this is a 300 tick chart? It's not a candlestick chart?
That's right. I love the tick charts. They tell me price just so much more cleanly, I think.
Tell me more about that. I don't really trade the tick chart. How do you read this tick chart?
For some reason, my eye, when I see wicks on time-based charts, I tend to get impatient and not wait for the wick, and maybe I'll buy like the bottom of the candle body, but there may be 5-10 points of wick there on a 5-minute, let's say. So then I sub-optimize on my entry. The tick charts, you don't have much wicks. So I can really see where that support is. Like you can see, like, boom, bounce. I like looking at price and say, okay, we had a reaction of 20 points, 50 points, 100 points. Next time we get there, probably going to have another reaction. That's my bet every time. We're probably going to have another reaction. This one, I waited. I thought they'd kind of sweep it. They did. I bought. I was early. We still punched a little lower, but then immediately rejected. Boom. That's still a perfectly valid support, in my opinion, this whole sort of range here. And the tick charts just delineate those highs and lows so much better than a bunch of stacked time-based bars, in my opinion, at least to my eye.
Okay. So that was a nice sweep long there. How many contracts did you use there? Are you trading minis or are you trading micros?
I trade minis, and I'm never trading more than probably 2 max. If it's a 50K or a 100K account, I'm not going to trade more than 2. I have some 150Ks. I'll take that up to like 4. No problem. I'll do that.
And so what's your typical stop loss like?
My typical stop loss is I'm going to need to see a pretty good violation of that support. So it's going to be context. I don't really get too caught up. I don't really mind if I lose, FSP. So I just don't mind. And I have a negative risk reward. Okay. I know that's a thing that you're not supposed to be able to survive with a negative risk reward.
Clearly you do.
So if my average loss, if I take a full stop out, is probably going to be between 30 points and 50 points. So on a one lot, that's going to be $600 to $1,000. And my average gain is going to be between 10 and 20 points, you know. But the reason why I think that math works is, one, I only buy support. So I'm always sort of in a location where even if the market's going to break, it's probably still going to bounce a little bit and let me at least monetize it. So the win rate is very high. And 2, there's a lot of times where I will just scratch it and not wait for a stop. So I'll just kind of be watching it and be thinking like, I don't know, this is really trading really bad. I'm just going to scratch it. Or there's times where the support buy is good, or I believe it's going to be good, but I'm just early. And then I will do what I call synthetically DCA across accounts. I do a ton of that. Let's say I have 5 funded accounts. I'm going to buy one at that support. If it violates it and I still like it and price action still feels bullish, we're above VWAP, it's a nice green day, the news is bullish, price action is bullish, I'm just early, nothing wrong with that. I'm coming in with another account at a better location. And I may do that with a max of maybe 3 accounts or so. So I'll end up in a synthetic DCA. Even if I have to scratch the front entry at a break even or a small loss, I may have made money on those backs in the other accounts. I'm totally fine with that.
Love it. Because you can always save the better entry. Like let's say on your second or third entry, you have a good profit. So now you close it at a flat or small loss on the first one, but then your 2 other ones banked.
Exactly. Net them all out. You probably made whatever, $1,000. I'm fine with that. I'm fine if one's impaired by $100 or $200. No problem.
Absolutely. I like it. I like it. That's amazing.
I do that all day, FSP, because even good support, you're always early, man. You're almost always
Yeah.
early. I can go through some more charts too.
A lot of people can't take the momentary red they see on the screen. Like the moment it's red, they're like, oh, I gotta get out. And then it goes back into favor. And then, it's like getting chopped up. Sometimes I fall prey to that too.
You know what makes that a little easier, I think, is by immediately flipping to another account, because then the P&L's out of your face. It's gone.
Yes.
It's gone. You don't see it. You just let it work in the background.
So do you have multiple charts on, or did you just use one chart and you just use the drop down and rotate to another one?
I have Quantower open with all of my rhythmic connections, because you can have multiple rhythmic connections at once. So for the different props that are rhythmic. And then I have all my Tradevate-based accounts on my Ninja. So I trade between those two.
Okay, so theoretically, you still see the P&L, but the chart is not like in your face. Like you rotate it to a second and third entry. There you go. Okay.
And really, the P&L, I mean, after so many trades, man, and because to me, it's not my real live account, like I just don't feel a lot of stress from the P&L, because it's like your real risk is the $200 you put in the account to buy it. That's your risk.
Yeah.
If it's down $2,000, you did not lose $2,000. You lost $200 when it's blown. That's your risk. And you know what? In my opinion, that's not a big deal. That's okay.
That's the same thing as your deep in the money call. Your risk is zero on those calls. It's the same idea.
It's the same idea.
Yeah, you buy the calls and you already mentally resolve that whatever those calls, if they go to zero, it's zero. Same thing for futures prop. That's why you're successful with this strategy, because it's expense. I talked to Michael, I talked to Samjo, I talked to you. People who have had success with this strategy is when they understand like blown accounts are business expense. If you literally can understand that, I think you'll do so much better. Like, let's say you're not getting similar results like SMC or other guys. If you can understand, like if you're running a restaurant, you're dropping 5 grand, 10 grand in marketing, you don't cry over 10 grand of marketing. Same thing for prop firms. If you spend 5, 10 grand on accounts, if you can stay net green, you don't need to cry over those.
Very well said, man. A prop firm account is a call option on the upside. And if it gets blown, then it expired worthless. That's a great way to think about it.
There you go. Absolutely. I love it. I love it. Okay. So by the way, though, on this buying support strategy, what about on days when it's a sell day, liquidation day? Because I get hurt on those days. I think it was maybe a couple of weeks ago. It went down 400 points. And in that morning, I tried to catch it and I blown up like a whole bunch of evals. So that wasn't fun.
No. So I get hit on a big down day that has no obvious reason, or sometimes the reason comes after. So even as retail traders in front of Twitter all day, we're still the last. It feels like we're the last to know a lot of times.
Yeah.
So in that scenario, you're going to get hit. And the way I try to manage that risk a little bit is I won't synthetically DCA more than 3 accounts. So my worst case scenario is 3 accounts are going to get impaired on the day. And that doesn't mean blown. It means I may lose $1,000 in each one of those. And I just have to accept that. If the market's going to do what is a very low probability thing, which is break through support, then break through secondary support, let's say, without a single rotation for me to even clip 10 points or something, and there's no news that would have kept me out, then I have to just accept I'm going to lose on that. And that it's so low probability that I have to just accept that's part of the uncertainties of the market.
Okay. So on those days then, let's say you went down 400 points. I think it was like maybe last week or something. Let's say you lost 3 accounts. At what point do you go buy again? Because if you don't short, then do you trade that day, you walk away, or like how do you handle like a very big liquidation sell day?
The moment I see new structure. If the market falls that 400 FSP and then it bounces 75 or 125, that's a new low. That's a good low. Market just reacted off that low. You know, Twitter is funny. You got so many people on there who are constantly posting charts after the fact and stuff, and they're all like, yeah, hit my level exactly. As if every hedge fund cared about their level. Like BlackRock really cares about their level. Like, no, they don't. So it's just a coincidence if that happened. And instead, what I like to do in days like that is sit back, grind my teeth that 3 accounts got clipped, wait for that massive bounce and say, okay, that's the level. I didn't have to pay for that information. Thankfully, I don't have 10 accounts all getting blown out. I just have to sit now and wait for a retest of that level. Because if the market is down 400, volatility is up, liquidity is low, we're going to start when we find a base moving violently sideways for sure. That's what the market does normally. And at that point, If we retest those lows, I'm coming in and I'm buying it. I'm not even going to question it, FSP. I'm buying it like no matter what, because the market 15 minutes ago just bounced 125 points off of it. It's probably going to at least bounce 20 this time.
Okay, so how do you gauge, like, for example, do you look at the support? Because support to different people can mean different things. Some people look at an hourly support, 5-minute support, 1-minute support. How do you gauge your level of support?
I use my 300 tick chart intraday, and I just look for how much did price move off of that level? Was it important? You know, it's all going to be volatility specific. If the VIX is at 14 and we get a 25-point bounce, that's enough for me to come in and say, let's get after it. If the VIX is at 30 and the market only rallies 20 points, I'm not interested because this thing's moving. That's a day when the NASDAQ can move 500 points for no reason at all. So in that scenario, I need to see more. I need to see 75 points, 100 points. And even still, I could lose. Absolutely. Where we're at right now, like today, I got probably 4 more charts or so.
Yeah, let's see it. Let's see it.
Yeah. The VIX is low, so I'm perfectly fine with smaller rotations.
Yeah, but the VIX is not giving me a lot of good feelings with things pumping like near highs, you know? I mean, we're going to have a VIX pop soon, and you know what that means. So.
I'm a little nervous too, you know? So you can see here, and right here, we broke this prior support. A lot of people would say, okay, that's broken support. Now I'm only shorting. I don't believe that. I mean, that's just ridiculous. The market was up at this time. That seems like a terrible place to short, even if it works. It's just every so often you get those wonderful clips that everybody, like they all want to be on it. Me, I'm fading those all the time. Okay. I didn't know it was going to stop though, FSP, so I did not get involved. But then we bounced nicely. So now I'm saying to myself, okay, I got in here a little early, hoping maybe this would be good, kind of turn off this one here, this one here. I was early. We went lower. We tested the secondary. I added. We got the pop, profit right there. Boom.
Nice. How many contracts in the first entry and the second entry?
I think that was just 1 and 1.
Oh, that's good. Wow, you're really disciplined with just 2 contracts. If I was trading on my own, I might have been 4 or 8 contracts.
I know. I don't know how you do it, man. I blow it every time I do that, I blow them. So I just don't.
Well, there you go. I blow the accounts more often than you do because I look at your chart. I don't know how you do August, 32x your expense. That's why you have very good discipline. I have to learn that from you, man.
And I trade a lot. So I think I probably put on more. I don't know that I put on more trades than you. That's probably not true because you trade a lot too. I think probably the difference is that when I'm not in an eval campaign, I'm entirely funded. So a lot of those smaller pullbacks that you take, those micro scalps, those micro dips as you call them, I think a lot of times you do those in evals where I'm hitting those with fundeds.
Ah, okay. How many fundeds do you trade like typically a day?
I could easily trade 30 in a day, easily.
Yeah, it makes sense. And then each account, how many trades for each account on average?
So if I'm close to a payout and let's say I only need $200 or something, like I'm doing 1 10-point move, I'm done with that account. I'm not touching it the rest of the day and I'll rotate. If they're bigger accounts and I'm further away from payout, I like to be somewhere around $500 a day in those if I can do that. So that would be around 2 trades probably a day in the account.
Interesting. So you mentioned you have a few more charts?
Yeah, let's go through them.
Yeah, because it's so far from what I hear, it seemed almost so simple. I'm like, what secret sauce is he doing? He's saying he's buying support. He's waiting to buy 1 or 2 contracts for max, you know, and he just buys. He doesn't short. So yeah, run us through a couple more charts, man.
I'm telling you, man, if you looked at your numbers, I'll say this to every single person listening. Okay, brief tangent. Markets go up. Why do they go up? First off, it's an index. Bad companies get booted out, good ones come in. So it goes up for that reason. 2, inflation. It's the Fed's mandate to have inflation. What's that mean? That means the dollar goes down over time. That's the denominator on these indexes. That means price goes up. Companies make money. That means price goes up. Companies own assets, which also appreciate with inflation. That means they go up. Markets go up. They just do. So you don't want to fight that, in my opinion, unless you have a great reason. And on top of that, if you look at your trading and you say to yourself, I'm struggling, I'm not getting payouts, I guarantee it's 1 of 2 reasons. You're either too big or you're shorting too much. It's those 2.
There you go, man. There you go. So basically, this is the strategy, guys. Buy the dip.
Right here.
Buy support.
Boom. Look, support. Look at this bounce. I didn't know that bounce was going to occur there. I mean, you could look back, but I think that was overnight. I can't remember. But that bounce there, This one didn't quite get low enough for me to get it. This one broke it. I came in, bought it. At this point, it looks like it's going to zero. Nope. Boom.
So it looks like you buy a lot of sweeps from the previous few charts. You don't really buy support. You buy a little bit of under support.
You'll see I actually do that as well. Here, let me flip to this chart now. Here's a good example where I do get ahead of it. This was today. This is where we were really kind of chopping up near highs and stuff like that. You know, it was bullish before the liquidated in today. So I felt a little more comfortable coming in here and being like, yeah, let me get something right in here. So we didn't break this prior little dip. We just kind of got here, chopped around, and then we went up. And in this case, this move was a little bit bigger because I felt like it had the ability to kind of maybe get up here and retest some of these other highs. So I let that one run a little bit more.
Nice.
So I am totally comfortable front-running support just a bit. I don't mind because, like I said, I'll synthetically DCA across multiple accounts.
Right. So when you synthetically DCA between 3 accounts, let's say the second entry is $100 in a profit, the third one is $500 in the profit, and the first one is like down $300. Will you close all 3 of them at the same time, or will you try to at least let the first one run back to break even? How do you normally do it?
A lot of times I try to let the first one go back to break even,
Okay.
but I don't know that that's a profitable endeavor. If I were to actually try to analyze that, probably would be smarter to maybe just take the small loss because those can tend to turn into bigger losses.
Yeah.
Because you've really got pretty poor trade location on that front. So it's like if you were down 800 on it at one point and now you're down only 2, probably just take it off. But I'm not great at that. And probably there's a percentage of my expenses which are due to that right there, you know?
Yeah. Yeah. Sometimes they do it, but the times they don't, you blow up the account for sure. So
yeah, exactly.
So are you currently trading on your own? Do you join us in the live stream and stuff? Like, I know you said in the beginning of the year you found out about the community, right? Well, I mean, what's your experience so far? Are you trading with us, or how do you find the community so far?
Well, I don't copy trade you. I don't do any of that, you know, because again, I only buy support. I know as a new trader, I probably would shadow trade you, FSP, because you make money, and that's really important. You make money and you show live entries and exits. Most people don't because they're probably frauds. So you show real entries, real exits. If I didn't have years and years of experience, I would just turn my brain off and shadow trade you until I figured out what works and what doesn't, sort of more on my own.
I probably wouldn't. Don't shadow trade me, guys. I mean, I get squeezed all the time, so don't do it.
I know what I would do, and that's probably what I would have done. But instead, I don't join the stream every day because I have a full-time job as well. So sometimes if my trading is over early on, then I'll just move on. Maybe I'll come back later in the day or something. But as an experienced trader, that I love about the stream and why I still tune in is when you and I are in agreement about sort of bias and levels. I really like that because you know where the line in the sand is on the day based on structure. You just know it. You can feel it. You can see it. You know it. It's something you learn after years and years. You know that's the level on the day where the bias changes. And when you and I are in total agreement about that, you know, that's a good feeling because we'll be more aggressive as long as we're above that level, let's say.
Yeah, for sure. I mean, I love seeing confluence of different bias in the chats, like whether it's you or other traders, or sometimes seeing like, hey, I'm on the long side or I'm on the short side and people are buying and I'm getting squeezed and I'm thinking, should I keep on shorting it? So it's always good to have that. You know, if you find confluence, great.
Well, the answer is no. The answer is no to that. You should stop shorting it, FSP.
There you go. Right. Just keep buying because stocks only go up, you know?
Well, don't. I never said that. That's not exactly my thesis.
Right. They know we're joking. They know we're joking. We're having fun. That's the whole thing about the community. We have fun, you know? So guys, listen, all right? We got SMC here, logging in over 500,000, including futures options and prop firms. And he has a day job. I don't know if you guys are hearing this. A lot of traders, like last one we interviewed with Sam Joe, he has a business. I have a business. Before I traded, I had a business. So if you think you can't have a job or have a business while learning trading, you're lying to yourself. For example, let me ask you, SMC, what does your schedule look like since you have a day job? Like when would you trade? How would you balance your job? And how would you do the entries and exits?
I trade, well, not tonight, but I like trading Asia. I do that.
Okay.
I also get up in the morning pretty early and I'll trade in the morning, sort of London into New York. And then the first half hour, my volumes are super low because those market on open orders, they don't care about support. like technicals just don't really matter, in my opinion, over the long run when you're talking about market on open orders, just like market on closed orders. Technicals just don't matter. Most traders know don't trade after about 3:30 or so. Why? Because technicals just don't matter. It's just liquidity coming through and blasting orders to get filled. So I tend to avoid that time frame because I don't believe over the long term I make money in it. So then after around 10 or so Eastern, then I'll check back in and start looking for opportunities. I'll find areas where I like support. I'll put in orders ahead of time in different accounts. I'll set the ATM so that profit targets, immediate and stops automatically get put in. And then I'll go back to doing work and stuff, and I'll come back and I'll check and I'll see like, okay, those 3 accounts, they got filled and got hit profit target, or that one got stopped, or sometimes I'll hear it in my headphones. So then I'll know to kind of glance over. It's not super high maintenance. I'm not staring at every bar because the market has already told me where support is, like before I need to really figure it out. Like the market has already said this is the level to me, so I can just go ahead and put an order in ahead of time, and I'll keep like financial juice in my ear, something like that. And if I don't hear something that terrifies me, I'll leave those orders in. And inevitably there's a time where the headline comes out and I get clipped, but like I'm not too worried about those low probability moments where I get clipped FSP. And I'm certainly not going to change my strategy because of them. That's just the cost of doing business.
Right. Yeah, a lot of people need to hear that. Like even just coming back from work, some people feel like they're missing out. Oh, if I'm not trading every second of the market, you know, they feel like they have to just like not take a job. I tell people all the time, I have another person just message me like today saying, oh, I borrowed money to do this. I'm like, why are you not getting a job? I just don't understand. Your likelihood of success really increases when you have stable income.
Big time.
Yeah, that's one of those things that you just have to learn throughout the years. And I think you said you started 2011, 2012. I mean, it's been many years since then, right?
Yeah, definitely. You know, and my preferred time is that sort of 10 to noon because a lot of times on up days, it seems like that's where you get the grinding sort of pullback to support with profit opportunity. That seems like the highest probability. So that's where you'll find if you were to analyze all of my trades, you would see the majority of them are probably in that window.
Okay. So from what I hear so far, it seems like you trade 1 to 2 contracts up to 4. You trade from 10 a.m. to 12 o'clock New York session. You buy support only. You don't short. And you rotate your accounts up to 3. Your loss usually are about 30 or 50 points, whereas your profit is 10 to 20 points. But because you rotate your accounts, you still make a lot of profits and lock in payouts as you trade these prop firms. Is that about the brief understanding, or did I miss something out there?
Yeah, the only little tweak maybe worth calling out is the zero consistency prop firm accounts, the bigger ones. Like I have some 150K through Alpha and they are zero consistency. So sometimes on those, when we get into juicy support levels, I may ramp up a little bit of size on those and take it 5 or 8. But I'm going to start scaling out.
I like that. I like that. Hit those 8 contracts, man. I like it.
Because those are the zero consistency. They got bigger drawdowns. And I know I'm going to immediately try to shed half the size immediately for like $300 or $400 and then try to let the rest kind of just float.
Love it. I love it. It's like take profit, basically. No consistency on the funded. And you just let it ride, especially if you've reached static. You're not in trailing anymore.
What do you use for your take profits? What size do you use? I'm on the 25Ks and I'm thinking I'm going to switch to 150s because I like the bigger drawdown.
Yeah, so I use a mixture of 50Ks and 150Ks. The reason why I do the 50Ks is because the resets are cheaper. But I like the 150Ks because they give you more room. Like it's $4,500 in drawdown, 15 contracts, and I can really size up on those key levels and go for a big pump. But then I can only withdraw above $4,500 in profit. And so if I blow an account, I can reset a 50K for only $650.
Yeah.
So, I mean, if I reset it for 1, I can lock in, let's say 1. I mean, the math is there if you can lock it in, but I think you should experiment between the 50Ks and the 150Ks, depending on your personality.
I hate how frequently I blow the 25Ks with them.
Well, I mean, 25K is very low. It's like, what's the drawdown, 1,000?
I think it's 1,500.
Oh, 1,500? Okay. Yeah, that's not
so
a lot.
I have spent year to date with Take Profit $7,003. That's what I've spent on all my evals with them. And I have $17,400 in payouts.
There you go. You're net green.
I have a net green of $10,000 with Take Profit. But because there's zero consistency, I feel like I should be much larger there. You know,
Yeah.
like Apex is intraday drawdown and sort of deny happy, but yet I've only spent, I'm looking at my numbers right now, I've spent $8,196 at Apex. I've made $70,000 from Apex.
Well, there you go.
So my take profit trader numbers should be way better. And it's because those 25Ks, I'm going to switch. I'm getting off those, I think.
Yeah, with your skill set, I think if you do bigger accounts, you can probably lock in more profits.
Yeah, it makes sense.
I mean, you have traded for like many years, but what if, let's just say, I ask this question a lot on all the interviews I do. Like, let's say you have the knowledge that you have now and you go back 10, 20 years ago. What would you tell your old self starting brand new again, attacking the market? Because there are some people here that are just starting out. They didn't start out like you with a hedge fund and like 10, 20 years ago. What would you tell yourself and what would you tell those people who are brand new starting in futures prop and in trading in general? How can they succeed? Because trading is very, very difficult, right? What would you tell them?
Only buy support. Quit shorting. Never short. Never, ever short. Don't do it. Be flat. If you're bearish, be flat. Like, just look at the market. Look at it. Look at it since 1895 or whatever time frame you want. Just don't short. Even if the market goes down, FSP, you know this. Even if it's going down during COVID or whatever, you're probably still going to lose short because those rallies are going to be so violent and you're going to think, oh, we're back to resistance. I'm going to short it. No, it's going to rip through it 200 points. It's going to rip right through it.
Yo, you know one thing you're lacking, right? On your profile is 3 words next to your display name. Only buy support, okay? You can add that in there.
I guarantee you, if you're not getting payouts, you're too big on your entries and you're shorting too much. If you fix both of those, it is mathematically impossible, in my opinion, for you to not get payouts. It's just impossible.
Interesting.
Even today, think of the market action. We had to crater at the close, decently red, but before it did that, it had to pay out the long entries at support 1,000 times. Like, it just did it over and over and over all morning long. So even if you were right about the short thesis, great. You nailed it. You got it. End of day. But even if you were wrong, you still made a lot of money because you just bought support all morning long.
Yep, definitely. I mean, I tell people all the time on the stream, I'm a natural bull. I like to buy stuff, and I do get hurt on days when they liquidate and do hard sells, but generally speaking, the market is engineered to go up, that's for sure. But, you know, I think the overall theme is people are wondering when or if we get that kind of dot-com bubble sell, you know, after a 12, 15-year bull market.
Well, you know, the NASDAQ declined from mid-2000 to 2002 or something like that. It declined 80%, and it had, I forget the exact number, almost like 24 20% plus rallies during that time frame. So even if you were right, you had to sit through extraordinary amount of uncertainty and pain on that short. So it just doesn't pay, in my opinion. It just doesn't.
Yeah, I like buying stuff too. Sometimes you get hurt, but you know, that's trading. Sometimes you take losses, sometimes you take gains. But at the end of the day, if there's one thing I think you guys need to hear in this interview, it is the fact that different people trade differently. Honestly, I've never heard anyone say this, SMC, only buy support and I don't short. And if you guys are thinking like, man, this sounds so simple, how could it be? Sometimes trading is simple. Trading is so simple, and if you complicate it too much, I mean, look at the numbers. The numbers don't lie. Now, if you say like, yo, bro, it doesn't work, bro, you gotta short sometimes. Well, it works for SMC. It works for him. And if it works for him, there's no need to change anything because look at this. Are you currently spending $2,000 to make $64,000 in payouts for August? And are you spending 10 grand in July and locking in 58 grand in payouts? Like, if you're not, then I would suggest you, okay, reevaluate your strategy, look at what SMC is doing here and ask yourself, okay, he says only buy support. And if you still want to short, okay, you can short, but try to mingle your strategy with whatever he's doing. Because I know there's some people who only come onto the live stream when it's going down. And they're like, boom, let's go. Only when it's going down, you know? I'm like, yo, where are you, man? Where are you when we're buying that thing all day for like 3 hours? I wish you were there booming with us on the upside as well, you know? So it's funny, man. So if you are still listening right now You have probably heard the entire story of how SMC has gone from hedge fund to trading his own IRA account to futures prop firm. But we had to cut out the part with the personal IRA experience because some of you may not understand the options part that he talked about. But if you still want to keep listening, here's the part that he shared his gems on how he traded his IRA account that he turned from approximately 49K to 350K. Here it is.
Sometimes I would get myself in positions where, and this is my favorite position, and I still do this regularly, is let's say we have a nice decline in the market, like a 3 to 5% in the NASDAQ. I'll go in and I'll buy some deep in the money calls, okay? A lot of people like to go out of the money. No. I like to go deep in the money because I want as close to Delta 1 as possible. And we're going to get a little geeky here for just a moment.
Yeah.
I like to be as close to Delta 1 as possible so that I capture almost all of that upside as if I was long outright futures. But knowing my risk is protected at the cost, of course, of the option. And if the market goes against me, the deltas go down, which means my losses actually go down slower. So when I'm wrong, I lose money more slowly. And when I'm right, I make money more quickly. It's the best contract. And then what I love to do is get that position on. Let's say we take a 3% nosedive. Boom, immediately get a position on, maybe 4% of my portfolio or something like that. And then come out by 20 to 30 days of time on that, then sell half of that exposure. Let's say it's 10 contracts. I sell 5 immediately the next day, maybe 1% or 2 higher to immediately start getting paid while I wait. Because my belief, FSP, and I learned this from the hedge fund, is if I take my money and I give it to the market, and I take risk from the market, that is a service that I am providing to the marketplace. If the market is falling, it is demanding liquidity. So if I show up with that liquidity, I should be paid for that service. And if I take risk on my balance sheet, which is call options, and then I immediately hedge out some at a much higher strike, which locks in a certain profit on that, then I'm getting paid to wait, and I believe that I'm basically entitled to that as a service that I've just given to the market. I'm warehousing risk on behalf of the market. So I did a ton of that in my IRA. I still do, but as you know, in props, we're intraday only. We can't swing, and it's directional futures trading. You're not allowed to hedge. So as you can see in my numbers in April and early on, my expense ratio was high because I had to go through a bit of an adaptation from what I was used to. And we can get into what that entails too.
That's really interesting because a lot of people ask about how do you trade a personal account? Now, for those of you guys who may not be too familiar with what SMC talked about here, he's trading options futures. So instead of trading the futures like NQ, they're options on futures. And so I have not personally done that. When I do it on triple Qs or I do it on the SPY. So I'm learning here. Now, when you say that you buy a close to 1 delta and it's like a deep in the money call, when you say you will lock in the next day for 1 or 2%, do you mean 1 or 2% of the overall account or the actual options contract in terms of profits?
Let's just say it's at 23,400. Let's just pretend I wanted to go long here. I might buy the 23,000s. So 400 in the money. And let's say I bought 10 of those. I'm going to sell 5 that expire tomorrow at 23,650 or something like that. So that if the market explodes higher, yes, I will lose between now and tomorrow probably on that hedge of those 5 contracts, but the profit will be so explosive on those near Delta 1 on twice the size that I'm okay with that. And if the market were to collapse to 23,000, I'm going to lose way more on the calls I bought, of course, but I've got 20 some days probably to go on that. The deltas have gone down, so I'm losing more slowly, and I will make on the options that I sold against it tomorrow because those are going to expire worthless, and then I'm going to start rolling and hitting it again and again. And I'll do that every single day until either the position is just so underwater. At that point, I'm just going to say to myself, okay, I lost the 4% of, let's say, my entire portfolio on that position. Now, at that point, the market's probably down 8% or something. And now I'm saying to myself, okay, volatility's up. I can probably come in hit it again, maybe for some slightly smaller size, but because the moves are so much bigger, end up with a pretty nice P&L, even though I was wrong on the first entry. So the key there is, of course, not getting so big you can't recover.
So you don't do a spread. You don't sell a higher call. You just buy a deep in the money call.
I don't know what you would call it. It's like a spread calendar or a vertical calendar. So I'm going to buy 20 days out deep in the money and sell tomorrow's much higher out of the money.
Oh, gotcha.
And I love that FSP because let's say the market rips to 23,600. I've got a huge unrealized gain on the deep in the monies.
Right.
The hedge that I sold is still far enough out. It expired worthless, so I got paid. And now I can come tomorrow and say, I'm going to sell the 23,900s as the hedge and just keep rolling that up.
Yeah.
And the principle there is I still have risk on my balance sheet with those deep in the money calls. I should be paid while I'm holding that risk. I should be paid by the marketplace for that.
Interesting.
And not just in unrealized gains. I should be paid now, every day, while I'm holding that risk, in my opinion.
Yeah, absolutely. You got to be paid by your risk. But let's say you do 20 contracts on a deep in the money. So how many hedge would you sell on the tomorrow's
10.
expiry? 10?
Yeah.
Okay, but then you won't collect too much premium because tomorrow's expiry and you're doing very far out of the money, right?
Yes. So I'm only going to recover a percentage. It's probably less than, maybe 5%, somewhere around there. But my idea is I've waited till a 3 to 5% pullback already in the marketplace. And on top of that, I think I'm buying at a pretty good entry. So I like that. I'm buying probably some support and some blood, and then I'm selling against that. And because those deep in the monies have between, let's say 20, 30, maybe even 40 days of time on them, I know I can continue to roll those hedges so that even if it's just 3% today and 3% tomorrow and 3%, and when I say the percent FSP, I mean percent of my capital at risk on those deep in the monies. Okay.
Okay.
Let's say I have $20,000 of notional risk. If those go to zero, I'm going to lose 20 grand.
Sure.
Then tomorrow I want to make whatever that is, $500 on my hedges. And if it still doesn't go, if I'm still not able to monetize those deep in the money calls, well, then the next day I want to make another 500. And it doesn't take too many days, 10, 12, 15 days where finally you've got a good chunk of your capital at risk covered, and maybe the market kind of stabilizes and finds some random reason to rally. And maybe you don't even get profit on those deep in the monies, but they rally enough to where you take them off and you still net out green because of all the hedges that you were able to roll through that time frame. There's a lot of ways to make money on that type of position that I just love. The market has to work so hard against you for you to lose money in that scenario. And the main thing, though, is I'll never go bigger than about 4% or so. I just don't. That's how you can carry that kind of risk and do it over and over and over.
That's very interesting. Very, very interesting.
Yeah.
So it's kind of like selling naked puts on the other side, and you're willing to buy it if you get exercise. But then on this one, you have the calls.
And it's almost like a covered call, FSP, because they're Delta 1. It's almost like a covered call.
Exactly. I like that. I do cover calls as well.
I can sleep at night if Trump comes out and does something because I know I'm only going to lose the 20 grand, which is a lot.
That's right, man. If he comes out, he puts the tariffs on, Everybody, tariffs back on. Never.
If the markets lock limit down tomorrow, okay, I lost on my options. At least I don't have to panic that I don't know what kind of bid is going to be there to liquidate the futures.
Absolutely. So I want to follow up on that $20,000 notional value. Let's say if it's $20,000 notional value of all the deep in the money calls, how much of premiums are you looking to collect on your hedge? Did you say 5% of that 20,000?
Probably if I had $20,000 in a position, like let's say I bought tonight, I'm going to want to at least make 500 to 1,000 on that hedge by tomorrow's expiry.
Yeah, because they add up. Those things add up. It's like when you get chopped up, right? When you get chopped up when you're trading futures, a few hundred here, a few thousand there. At the end of the day, I'm like, how did I lose $8,000 on this funded account? And it's because I got chopped up, Yep.
So. And there's been many times where the core long didn't even make me money, but the whole sequence, I actually made money because of those hedges.
So do you like do the hedge when it's pumping, or do you do it like when you actually take entry?
Yes, I do try to. So sometimes if I feel like if I'm a little scared, which normally means I'm probably being dumb, in that scenario, I'll tend to hedge it a bit aggressively. Sometimes if I feel like, nah, I think I got them, I'm going to let it go for just a bit. Then I'll try to wait for a little bit of a rally. And it could even just be like a 50-point rally. It doesn't even have to be that much for you just to be like, okay, let me throw some hedges out there now. Let's start legging out some of this.
Very, very interesting.
Because remember, the context is we're down like 3 to 5% already in the market, which I find is a nice area where you can normally bounce, even if the poop's hitting the fan. You know what I'm saying?
Yeah. Did you do the strategy when it was in April, when the market went down like 15, 20%, trade talks?
Yes, I did. Now, obviously, one of the things the fund taught me is every day you wake up and you say to yourself, what's going on in the world? What's the macro? What's the bias? Is there bearish news? Okay. Is the market interpreting that bearish news bearishly with price action? Okay. Well, then that's confirmation. So let's not get all bowled up on the day. You know, I really try to wake up every day and interpret the news. Doesn't mean I'm right. And then if the market is confirming my interpretation of the news, then I'm going to be quite a bit more aggressive on the day because that means I think I got a good read. If there's a collision there between price action and my interpretation, I'm more skittish. I'm either not going to have a great day, I may lose some money, or I may just back off and my volumes will be much lower.
Very interesting. All right. Well, SMC, you dropped so many gems here on this interview. I really appreciate you doing that. By the way, if people want to find you, is there a way that they can find you? Do you have a channel or just a Discord? Any last words you want to say to people or how they can find you?
I'm in your Discord, but I don't really have an online presence. I don't desire to have one. God bless you for having one, man. And you do it well. Like, you're really good at it. You've cultivated something really great. I was reluctant to kind of even do this, but I don't have an online presence, but I hope I've helped somebody who has a light bulb moment to say to themselves, wow, you know, synthetically DCA across accounts. Okay. Only buy support. Okay. Size down, don't short, use lots of accounts. Okay. Like, those are the main sort of concepts, and hopefully it helps some people.
Absolutely. And I appreciate you so much, SMC. This is just the beauty and the power of the community. We have like silent killers, like people who are killing it in the background. And if it wasn't for people like you and others that we have interviewed, we would have missed so much more inspiration. Like, I released those interviews and people are like, man, I feel like giving up and I feel so inspired now. I want to try this and that. You do not know, SMC, your interview, like what you shared with us today, you do not know how much impact and inspiration you are leaving for people. So for that, I thank you, man.
Yeah, I'm glad we did this, man. I appreciate it.
Sounds good, man. All right, so guys, this is the interview with SMC. If you want to trade with us every day, we live stream 9:30 for free. Remember, next time when you're on the stream, if you see support, you know what to do, all right? You only buy support according to SMC here. Of course, it's a joke. You know, trading is hard, right? You can lose money, but use your risk management. And if you can manage risk, you have a strategy over the long term, you'll do well. So until next time, I'll see you guys on live stream. Thank you once again, SMC. I'll see you in the community.